Welcome to our video on tackling unexpected tax bills. In this guide, we'll explore various strategies you can employ to effectively manage tax liabilities that might have taken you by surprise. In this video, we will cover the challenges presented by unexpected tax liabilities, specifically those arising from restricted stock units. We'll discuss some effective solutions and considerations you can employ to manage these taxes. Finally, we'll provide you with key advice and tips to avoid such financial burdens in the future. One of the most significant financial challenges people face is unexpected tax liabilities. These liabilities often arise from restricted stock units or RSUs. They can indeed create a financial crunch because they are not always anticipated and can be difficult to manage without proper foresight. Let's dive into some practical solutions to handle these tax challenges. First, the best approach is to ensure you pay on time to avoid penalties and interest. Alternatively, consider selling a portion of your vested stock to cover the tax. Many people have this set up automatically. If you're unable to pay immediately, an IRS installment plan is an option, but you need to be aware of the user fee, potential penalties, and interest rates. There's also the credit card option. Using a 0% introductory rate credit card can help manage your taxes, provided you clear the balance before interest kicks in. Lastly, to prevent future issues, consider adjusting your withholding allowances for future income. If you're opting for an IRS installment plan, there are some technicalities you need to be aware of. Firstly, note that a user fee applies when setting up the arrangement. Also, failure to pay penalties range from 0.25% to 0.5% monthly, but these might be waived for first-time occurrences. Interest is charged at 7% annually and is compounded daily, which means it can add up quickly. Remember, your payments will first go towards reducing the principal tax amount, then penalties, and lastly, any accrued interest. Now let's see if you're paying attention. Here's a quick quiz question for you. What is the potential interest rate for an IRS installment plan? Your options are 5% annually, 7% annually, 10% annually, and 4% annually. You may pause the video now to think about the answer, and we will discuss the answer in the next section of the video. The correct answer is 7% annually. This interest rate is crucial to understand since it is compounded daily and can increase your payables significantly if you prolong your payment timeline. To summarize, here are some key takeaways. Always pay your taxes on time to avoid any penalties. If you're vested in stocks, consider selling them to cover the taxes. When cash flow is tight, IRS installment plans are a valid option, though you should always be aware of the associated fees. Using credit cards with 0% APR can be a good short-term solution. And finally, adjust your future withholdings rather than facing another surprise later on. In conclusion, managing unexpected tax bills involves considering multiple strategies and picking the one that best suits your situation. Ensure to educate yourself on tax obligations to prevent any future surprises, and if possible, consult a tax advisor for personalized advice tailored to your needs. Thank you for watching our video. We hope you found the information valuable. Don't forget to like, share, and subscribe to our channel, and let us know in the comments how you handle tax surprises to help others in the community.